Hi, everyone. So I'm Jason Potts. I'm a professor of economics at RMIT University in Melbourne, Australia, coming to you live from Sunday morning. So I run a research center, which is blockchain. It's Blockchain Innovation Hub, and it's essentially a bunch of social scientists, economists, lawyers, and the like. And we've been looking for the past few years at this whole question of what decentralized economic systems and decentralized societies will look like. And a lot of the work that we've been doing has been trying to sort of forecast and understand what's coming over the next 2 or 3 or 4 years as this blockchain and affiliated technologies, other sort of digital decentralized technologies, move their way into the economy. And I want to talk about that, and I want to call that sort of capitalism after Satoshi, in the sense of what happens when we move from industrial capitalism era to a sort of post-Satoshi capitalist era. But I also want to connect that back to COVID-19 in the sense of what has just changed. And the story for us is that the post-COVID, post-Satoshi world is actually much the same. It's an alignment of trajectories. And the argument I want to make is that what COVID has really done is just massively accelerated these trajectories by creating a huge demand for decentralized digital technologies. So it's a kind of, we've just jumped into the future a little bit. And I want to sort of talk through that. So the work we've been doing, we've written a few books and articles on this topic. The one I'd want to point to is called Understanding the Blockchain Economy, which is a book by my colleagues, Chris Berg, Sinclair Davidson, and myself. We've also written a book called Crypto Democracy, which is looking at the implications of what this does for voting. We've got a new book coming out called New Technologies of Freedom. And I think hopefully by this afternoon, we'll have a book out called Unfreeze, which is about how to rebuild economies after the COVID pandemic. So we've got a lot of sort of work out there that you can refer to and get a sense of what's going on. The other one I'll point to just early on is one of my former PhD students, Trent McDonald, wrote a fantastic book called The Political Economy of Non-Territorial Exit, which was about how blockchain can be used to create new sort of non-territorial communities and societies. So very much inspired by the startup society movement in this space. So there's a bunch of literatures out there that I would direct you to. You can search those. All right. So what the economic argument I want to make here is the impact of blockchain technology on modern economies is not at the surface level of new products and services in an economy, but it's at the infrastructure layer level. So this is new digital infrastructure for modern economies. Now, we normally think of infrastructure and utilities as things like water and roads and transport and pipes and that sort of underlying economic infrastructure for trade. What blockchain is bringing is another closely related sort of infrastructure that we don't normally think of as infrastructure, but this is registries, law courts, public administration, money in public finance, and this other layer of this payments and contracting and administrative and registries layer is just as much economic infrastructure as roads and pipes and so on is. And what we've got is a fundamental sort of shift in these infrastructure that is that is for the maintenance and protection of property in an economy. So this is the shift that this technology has brought in. So blockchain is a new economic infrastructure. The significance of it is that it's not that it cuts across a whole range of all sectors in the sense that we've got sort of blockchain applying to primary goods industries in terms of supply chains, working out through commodity trade and so on. We've got it in creative industries around sort of registries of IP for songs and music and so on. We've got it in health tech and so on, where you're dealing with, and fintech, where you're dealing with identity infrastructure and all sorts of other sort of aspects of this. So the crucial thing here is this is a next generation digital infrastructure that is impacting every single sector of the economy, because every sector requires money, payments, registries, identity, and so on. So universal economic infrastructure. What does this technology do to an economy? The sort of Satoshi vision was disintermediation, that it disintermediated markets, enabling direct peer-to-peer interactions between economic agents. The other part, which is true, the other part of the story is dehierarchicalization. And this is the part that hasn't quite been appreciated, I think, sufficiently, is the idea that it takes large organizations, large hierarchical firms, large hierarchical departments, large hierarchical ways of organizing economic activity, and breaks those things into components. So you not only have disintermediation in the sense of market agents being disintermediated and replaced with peer-to-peer trading, you also have dehierarchicalization, which takes large hierarchical organizations and fractures them into smaller parts for the same reason, that you've got a process of lowering transactions costs, of coordinating, of contracting, of verifying and auditing all of the sort of various claims that are coming into economic activity. So two things are going on: disintermediation and dehierarchicalization. Both of those things point in the same direction of changing what an economy's texture is like, is that it becomes not just more decentralized in a sort of market sense, disintermediation, but also more each of the more modular in the sense of economic organization. So you've got a vertical and a horizontal fragmentation going on. Now, what that predicts is that markets are going to do more work, in the sense that more economic activity is going to be organized by markets. But also firms will be smaller, because the economic advantage of large corporate organizations previously was lowering transactions costs of economic activity in terms of monitoring, in terms of oversight and organization. And a lot of managerial responsibilities and organizational responsibilities were largely about just keeping track of who was doing what, and which are essentially what we've called in some other work costs of trust. So a lot of the advantages, or a lot of the explanation of why economies look the way they do, is that those particular organizational forms minimize the cost of trust. So large corporate forms can be quite efficient for scale economy reasons, but they're also efficient for cost of trust reasons, because of monitoring costs. What does blockchain and decentralized digital infrastructure do is it automates and lowers the cost of trust. Right? So some work that we've done, and we've published this in a few places, our estimate is about a third of the economy is essentially people checking each other's work. Now, whether this is professionals such as auditors and accountants and so on, auditing books, whether it's managers checking employees' work, whether it's the time spent in a sequential process within a firm or between firms, just verifying and checking that records and contracts are true, that things have been done. So there's an enormous amount of just everyone checking everyone else's work in an economy. That is the cost of trust. What does blockchain technology bring? Is it automates that cost of trust, doesn't push it to zero, but it significantly lowers it, or has the potential to significantly lower it off the level that it currently is, around, as we said, our estimate around 35%. So what does that mean? And it means is that, what is the function of a government in an economy? A key thing that it is doing, it is manufacturing trust. The administrative infrastructure layer that governments provide in terms of registries and record keeping and property rights registries and money and all sorts of things, and law and security, is providing a cost of trust that enables citizens to trade at lower cost. So this is one thing that we've known for a long time, that efficient, quality, competent governments facilitate trade, and corrupt and horrible governments make it very expensive to do that. So governments are an infrastructure that lowers the cost of trust. What is blockchain? It competes with that. It is an alternative technological solution to industrialized trust. And on some margins, that's what mining is doing. Mining is essentially an automation of this cost of trust. So that's the setup to the argument I want to make, is that if we think of the role of governments in societies, is that they're a base layer infrastructure that is lowering the cost of trust. What is blockchain technology? It is an automation of that same process, operating as base layer economic infrastructure to lower the cost of trust. So that's the first part in terms of what is the implication of blockchain technology as we think it competes with government as base layer infrastructure to lower the cost of trust. I think that's the obvious point. Everyone sort of kind of gets that. The more subtle point is what this then does to the structure of firms and the structure of economic organization. And what we see is that what the basic prediction we make, the capitalism after Satoshi prediction, is that this will lead to a it's a disintermediation. So there's more direct peer-to-peer market trade, but also a fracturing and modularization of large hierarchical forms. Large corporate hierarchical forms won't be as efficient in the future as they have been through the 20th century, 19th century. They will start to fracture. As they fracture, markets become more competitive. We have a whole lot of smaller, more agile, more niche firms. Now, the question is, what does that then do to economic policy and the role of governments in providing policy? Because two big things, part of the reason that governments got so big through the 20th century was two things that they did. One was this enormous demand for providing welfare, whether sort of social welfare or corporate welfare. So you've got both of these things that exploded in the early part of the 20th century as governments took on more and more a role of welfare provision. And a lot of that was just backlash against 19th century senses of capitalist instability and so on. So we've got this big growth that we see in the first part of the 20th century of governments providing this is sort of FDR and other sorts of things that came out of the Great Depression, massive expansion in the role of government to provide welfare. The second big thing was in the second half of the 20th century was governments providing industry policy and innovation policy. And a lot of the reason they did that was in response to this rise of large hierarchical firms, that large hierarchical became less innovative. So you ended up with government stepping in and providing those sorts of functions. So two of the major reasons that we had massive expansion in the role of the state in society through the 20th century was essentially in response to the enormous growth in hierarchical organizations that happened through the latter part of the 19th century and 20th century. So a lot of the reason governments are so big is a counter response to the reason that firms are so big. Blockchain technology comes in. This is capitalism after Satoshi. What this basically predicts is that firms get smaller again. They become far more efficient, we have a much more market organized society. What that predicts then is reduced demand for a lot of the economic policies and social welfare policies, sort of government provision of welfare. That was the main reason that came in the first place was in response to this enormous increase in the size of corporations through the 20th century. So what this prediction looks like, I think, is that what we're going to see, the historical significance of blockchain is actually to drive a retreat in the demand for large governments, because the reason that it grew in the first place was largely in response to corporate giganticism, to large hierarchical organizations. So this basic prediction here that the historical significance of blockchain going forward is not just disintermediation and dehierarchicalization, but the growth of governments is going to will be predicted to reverse because of demand for policy. That prediction is essentially something that we'd expect would play out over decades. The significance of COVID is it just massively accelerated that. We just suddenly got an enormous jump through the period of March and early April, where a whole series of industries, starting with telehealth and education suddenly going online, and a large number of sectors around uptake of digital shopping and delivery and so on. A whole lot of things that had always been set up for a while, but suddenly there was mass consumer adoption across every sector in every country. So a massive a coordinated acceleration of innovation adoption. And what we see then is that COVID-19 has accelerated a series of trends that blockchain started. These blockchain trends were only possible because of where we were in terms of digital adoption of internet technologies and other sorts of things that were coming through. But what the sort of prediction we make is that I think we're likely to see an acceleration of trends that were already in place. Where this ends up is, and I'll end with this point, is that there's been a lot of you may have heard this notion of the techlash is over now. I think that's absolutely correct. What we've got now is a enormous demand, not just for digital decentralized technology, to meet the needs of a temporarily more decentralized society with people working from home, but at the same time, a weakening of politics, a weakening of the demand for political solutions to these problems. So you've got all of these forces are all pointing in the same direction. Tech beats politics, this dehierarchicalization and disintermediation, reducing the demand for policies to sort of counteract that, and massive sort of adoption of digital technology as economic infrastructure. What is all of that points to? A golden age for special jurisdictions. This is the point now where we've got everything is in place for private provision of economic infrastructure to provide base layer infrastructure in a world where we've got demand for this is coming in. We've got a weakening of political or weakening of political competition to provide that type of infrastructure. So how we see this then is we've been talking about this as pop-up economies. This idea of temporary ability to throw up economic infrastructure as needed in jurisdictions. Now, a lot of that has been possible for, we've had the potential to do that for decades, really. But the significance of COVID is that it has provided a massive acceleration of consumer-led adoption of the technologies into households and by users and so on, to do that at exactly the same time that governments around the world have more or less shown large degrees of incompetence in dealing with these types of things. So the basic prediction that my team and myself have been making here is that we're on the verge of a shift toward digital, decentralized pop-up economies, where these pop-up economies are throwing up this base layer infrastructure. A self-sovereign society is whatever you build around that, but the underlying economic infrastructure we think is complete. So I'll finish there. Thank you.